In just one 3-month window, 41 different global corporations quietly signed contracts worth over $100 million.
Yeah, each.
Right, each. And they aren't, buying real estate. They aren't acquiring rival companies. They are aggressively rewiring the entire global economy for artificial intelligence.
Which is just a massive shift.
It really is. Welcome to today's deep dive. Our mission today is to take a financial document that, let's be honest, most people would probably immediately ignore.
Or fall asleep reading.
Exactly. We're looking at Accenture's Q2 2026 earnings report, along with the investor Q&A transcript and the slide deck, all from March 19, 2026. And we're going to reveal it for what it truly is.
Because if you look closely, this stack of papers is, it's basically a crystal ball.
Yeah.
It shows us exactly how the world's biggest companies are deploying billions of dollars literally right this second.
So to start, the sheer scale of the capital being deployed here tells a very specific story, right? About where we are in this technology cycle.
Oh, absolutely. We are officially done with the pilot programs. I mean, the Fortune 500 has completely stopped treating AI like some fun novelty.
Right, no more just playing around with ChatGPT.
Exactly. They've started treating it like mandatory public infrastructure. It's like electricity now.
Well, let's lay out the headline numbers to really establish that scale for you listening, because they are staggering. For this quarter, Accenture posted a massive $18.04 billion in revenue.
Which beat Wall Street's expectations, by the way.
Right. But the metric that truly anchors this entire conversation, the one we really need to focus on, is their new bookings. They recorded $22.1 billion in new contracts signed in a single quarter.
Yeah, $22 billion in 3 months.
Okay, let's unpack this, because to really understand those numbers, you have to look at Accenture's actual role in the ecosystem.
Right.
They aren't just, a traditional consulting firm anymore. They aren't just flying people in suits out to give advice in boardrooms.
Not at all.
They are operating as the heavy-duty plumbers and electricians of the AI revolution. It's like every other company in the world is dreaming about this shiny new house, but Accenture is the one down in the basement, physically laying the pipes and wiring the electrical grid to make it actually function.
And that framing is so essential, because when you see 41 distinct global enterprises cutting checks for over $100 million each in a single quarter.
Which is just wild to think about.
It is, but it proves we have moved completely past the AI hype phase. A year or two ago, the market was in this exploratory phase.
Yeah, figuring out what it even was.
Right. Companies were playing around with chatbots, figuring out how to, draft emails faster or write simple code snippets.
Right, efficiency stuff.
But now, we are fully entrenched in the massive infrastructure investment phase. A $100 million contract isn't for a chatbot subscription.
Definitely not.
That level of investment means a company is tearing its entire operational model down to the studs and just rebuilding it around an algorithmic core.
Which means we really need to look at the actual line items here. Because if you have 41 companies cutting $100 million checks, you can't just buy $100 million worth of software licenses.
No, you can't.
That money is going somewhere much, much less glamorous. And looking at the sources, there's this fascinating statistic that just totally exposes the messy reality of this transition.
Oh, the headcount numbers.
Yes. So Accenture had this stated public goal of having 80,000 AI and data professionals on staff by the end of 2026.
Right.
Well, they've already crushed it early. They now have over 85,000. But the real revelation in the data, the thing that really caught my eye, is that 1 in every 2 advanced AI projects they get hired to do immediately turns into a data project.
Yeah, that's huge.
Half of all these massive AI ambitions instantly hit a brick wall of just broken data.
Well, think about the underlying mechanics of how an artificial intelligence actually learns. It requires massive, clean, structured data sets to train on, right?
Right.
So when a legacy corporation tries to implement a state-of-the-art AI, they usually discover that their internal data is just a complete disaster.
Like spreadsheets everywhere.
Exactly. It's siloed in different departments, it's saved in obsolete formats, or it's full of contradictory information. You simply cannot build a sophisticated AI on top of a swamp of disorganized spreadsheets.
I want to borrow an analogy from the earnings call transcript here because it perfectly illustrates that mechanical failure. They compared frontier AI models, like the newest iterations from OpenAI or Anthropic, to a super powerful car engine.
Right. It's a great analogy.
It is. A 1,000 horsepower engine is an incredible piece of engineering, but your company's proprietary data, that is the transmission.
Yeah.
It's the wheels. It's the chassis. If your data is messy, siloed, or trapped in old formats, you have no transmission. You can rev that $1 million AI engine all day long, but your business isn't going to move an inch.
No forward momentum at all.
Right. So the reason Accenture's bookings are skyrocketing is because these massive corporations bought the shiny engine, brought it back to their headquarters, and suddenly realized they don't actually own a car to put it in.
What's fascinating here is the sequence of corporate technology evolution. It always happens in these distinct layers.
Right.
And the report highlights a brilliant example of this with one of their largest oil and gas clients.
Oh, yeah. I saw that.
For years, this oil and gas giant had to do the unglamorous, brutal work of digital plumbing. They executed a multi-year modernization program, taking their massive enterprise resource planning systems, their ERPs, and moving them to the cloud.
They had to build the transmission.
Exactly that. They had to force every department to standardize their processes and create a single unified source of truth for all their data.
Which sounds incredibly tedious.
Oh, it's massive.
Yeah.
But only now, after all that foundational plumbing has been laid and verified, are they able to actually layer AI into their core workflows.
Okay, so we aren't talking about a customer service bot anymore.
No, not at all.
Yeah.
We are talking about embedding AI directly into global supply chain management, predictive asset maintenance on oil rigs, and, daily field operations.
Wow.
Clients are no longer looking for bolt-on AI. They don't want an AI tool that exists as a separate application an employee has to actively log into.
Right, they want it invisible.
They demand that the intelligence be embedded into the absolute core of the business software from day one. So it is constantly analyzing large volumes of data, initiating routine actions, and making decisions in real time without any human prompting.
So if these Fortune 500 companies are spending billions to dig up their digital floorboards and build these new embedded engines, that has to completely alter what happens on the showroom floor.
Oh, fundamentally.
The foundation is actively being built, but I really want to understand what this embedded AI actually looks like in practice for the consumer. Because if you rewire a global supply chain, that inherently changes how you and I interact with these brands, right?
Yeah, the consumer experience is entirely downstream of all this infrastructure work. When the back-end data is finally unified, the front-end consumer interaction changes from a static transaction into a highly dynamic, predictive relationship.
The transcript provides 2 real-world case studies that I was honestly enthusiastically highlighting as I read.
Yeah.
Because they show the sheer spectrum of this shift.
Yeah, they're great examples.
The first one is Estee Lauder. They partnered with Accenture to create what they call a one operating ecosystem across their entire value chain.
Which I know sounds like classic corporate jargon.
It totally does. One operating ecosystem. But think about the mechanics of what that actually means. If a viral social media trend suddenly spikes demand for a specific shade of lipstick in Europe, the AI doesn't just notify a human to order more.
Right, it doesn't just send an email.
Exactly. The AI recognizes the spike, automatically signals the manufacturing plant to shift production lines, adjusts the supply chain routing to prioritize European distribution centers, and tweaks the digital ad spend all simultaneously.
It's all connected.
Right. It accelerates the execution so the human teams can step back and focus entirely on brand desirability and the creative consumer experience.
It removes all the friction of internal corporate communication.
Right.
The marketing department and the supply chain department no longer have to have a 2-week email chain to make a single decision. The whole ecosystem reacts as a single organism.
But the second example is the one that really blows the doors off what we think AI is currently capable of, and that's Radisson Hotel Group.
Yes, the hospitality example.
Radisson is using a platform called the Accenture Media Console. And they aren't just using generative AI to write, catch your marketing emails or summarize travel brochures. They are fundamentally shifting to agentic commerce.
That is the key word right there, agentic.
Right. Here's where it gets really interesting. We are officially moving away from AI that just acts as a thinker, an AI that answers questions or writes text to agentic AI, which acts as a doer. Exactly. Radisson has deployed AI agents that optimize live hotel inventory, adjust room rates in real time based on local demand, and connect directly into conversational platforms to convert a traveler from just browsing a website to actually booking a room. It executes complex workflows on its own.
And the results speak for themselves.
They really do. Radisson's share of direct bookings has tripled.
Tripled. The distinction between generative AI and agentic AI is really the defining shift of 2026. And it perfectly aligns with the executive surveys that were mentioned in the report.
One's about growth.
Yes. Currently, 78% of C-suite executives believe that AI's biggest value is going to be in growth, meaning using AI to actively generate new top-line revenue.
Okay.
However, the vast majority of current corporate AI projects are still efficiency-based.
Like trying to cut costs.
Exactly. They're focused on saving money by automating manual tasks or summarizing long documents.
Which is why the Radisson example is so critical. It proves the tide is actually turning from efficiency to growth. I mean, tripling direct bookings isn't saving money on a marketing budget. It is an aggressive capture of new market share.
Definitely.
It's acting like a hyper-competent digital sales team that operates 24 hours a day, simultaneously negotiating with thousands of customers.
And if you are listening to this, trying to map out how this affects your daily life, just think about your next customer service interaction.
Okay, yeah.
When you reach out to a retailer's contact center tomorrow, or you're frantically trying to rebook a canceled flight during a thunderstorm.
Which is always a nightmare.
Always.
But
You aren't going to be stuck talking to a frustrating rules-based phone tree bot. And you also won't just be talking to a single human agent either.
what will it be then?
You are going to be interacting with a highly coordinated swarm. Digital AI agents and human agents working together as one seamless unit. The AI is instantly pulling up your history, predicting your needs, and executing the rebooking in the background.
While the human handles the empathy and the weird edge cases.
Exactly.
That is a wild reality to step into. But it introduces a massive paradox here. If Accenture is traveling around the globe, walking into the boardrooms of every Fortune 500 company and telling them, you need to completely reinvent your business model for the agentic AI age, we have to ask, how is Accenture reinventing itself?
Well, they can't be hypocrites.
Exactly. They can't just sell the future while operating in the past.
They absolutely have to practice what they preach.
Yeah.
And their internal financial maneuvers over this specific quarter show you the exact blueprint of how a legacy giant rewires its own DNA.
Well, let's dissect their M&A strategy, their mergers and acquisitions, because this is where the financial document reads like a playbook. Accenture generated a staggering $3.7 billion in free cash flow this quarter alone.
Just massive amounts of cash.
And they are not letting it sit in a bank account. They announced plans to deploy $5 billion in acquisitions this fiscal year. But they aren't just buying up rival boutique consulting firms to add more, junior analysts to their roster.
No, the shopping list in the transcript is highly targeted and incredibly revealing.
Let's look at it.
Look at the specific capabilities they're acquiring. They're buying the underlying architecture of the AI economy.
Exactly. So first, they bought Faculty, which is a UK-based AI native firm that specializes in a decision intelligence product. So they aren't just analyzing what happened in the past. They're buying software that prescribes what a business should do next.
Right.
Then they bought a 65% stake in DLB Associates. And DLB is a data center engineering firm.
Which is fascinating.
It really is. Think about that. A consulting company buying a firm that figures out how to physically power and cool massive server farms. Because you cannot run the AI revolution without a staggering amount of electricity and cooling infrastructure.
The physical constraints of AI are very real.
And then there's the Ookla acquisition. Ookla is a network intelligence company, and the metrics on Ookla are mind-bending.
Oh, the revenue per employee.
Yes. They only have 430 employees, but they generated $231 million in revenue last year. But wait, let me push back on this strategy for a second.
Okay.
The fundamental century-old business model of a consulting firm is to bill for human hours, right? The full-time equivalent, or FTE model.
All right.
You hire smart people and you rent their brains out by the hour. By buying software products and network intelligence firms, are they actively trying to uncouple their massive revenue engine from their human headcount?
If we connect this to the bigger picture, that is the crux of their entire survival strategy. Traditional consulting scales linearly. You want more revenue, you have to hire more people and bill their time.
Which has a hard limit.
Exactly. Human labor simply cannot scale fast enough or operate efficiently enough to capture the full financial value of the AI revolution.
So they are pivoting to owning the intellectual property itself.
Precisely. They are willing to pay higher multiples, meaning they are paying a premium price over the current valuation to acquire proprietary data sets like Ookla and software platforms like Faculty.
Wow.
Consider Ookla. Every single time someone around the globe tests their internet speed on their phone or laptop, Ookla captures a data point about global network infrastructure.
Right. Millions of tests a day.
So by acquiring them, Accenture isn't buying 430 consultants. They are buying a proprietary global data house. When you own the platform or the data, you generate revenue through continuous subscriptions and licensing.
It is non-FTE revenue.
Yes, you successfully decouple your profit margins from the physical constraints of the billable hour. AI doesn't sleep, it doesn't experience burnout, and certainly doesn't need to fill out a weekly timesheet.
And to shepherd this massive transition away from the billable hour, they appointed the former CEO of Faculty, Dr. Mark Warner, as their new Global Chief Technology Officer.
A very strategic move.
Very. And he issued a very stark warning buried inside this financial report. He stated that AI is not going to be consumed at the margins of a business. It is going to fundamentally change how we live and work.
Yep.
And he added that for non-AI native companies, this transition is going to be incredibly hard, and many won't make it.
Many won't make it is a chilling sentence to include in a formal earnings presentation aimed at Wall Street investors.
Yeah, usually won't sound upbeat in those.
Exactly. But it is a brutal reality check from a CTO who understands that legacy companies moving too slowly are going to be optimized out of existence by competitors who adopted agentic AI.
But that chilling reality brings us to the core contradiction of this entire deep dive. Because if you're listening to this, you're probably doing the math in your head regarding Accenture's own survival.
Right.
If AI makes everything exponentially faster, doesn't that inherently destroy Accenture's bottom line?
It's the cannibalization question.
Exactly. There was a specific challenge brought up during the investor Q&A portion of the call that highlights this perfectly. An analyst pointed out that by using advanced AI tools, the time it takes to migrate a massive SAP ERP system can drop from taking multiple years to as little as 2 weeks.
From years to weeks.
Right. If I'm a consulting firm who usually bills a client for a 2-year multi-million-dollar migration project, and now the AI finishes it in 14 days, didn't I just vaporize 23 months of my own revenue? How does a business survive cannibalizing its own billable hours?
Yeah, it's a completely illogical fear.
Yeah.
The instinct is to protect the 2-year project because, well, that's guaranteed revenue.
Yeah, it pays the bills.
But the reality outlined by the leadership team is beautifully counterintuitive. Making the purely technical piece faster is actually a massive net benefit for their revenue stream.
Walk me through the mechanics of that. Because how is losing almost 2 years of billable work a benefit?
Because that 2-year technical slog was never the actual goal. It was a bottleneck. When a client was bogged down in a multi-year technical migration, it consumed their entire IT budget and all of their leadership's attention. They couldn't innovate because they were stuck literally just moving databases around.
So they were paralyzed.
Exactly.
Yeah.
Now, because the AI accelerates the technical migration to a matter of weeks, the bottleneck vanishes. The clients suddenly have the budget, the time, and the corporate appetite to do the really hard stuff.
You mean the high-level strategic work that the AI can't do autonomously yet?
Exactly. The complex human element. Change management, redesigning the entire corporate operating model to take advantage of the new speed, and finally tackling complex core operations that were previously just considered too expensive, too sprawling, or too risky to touch.
So what does a too risky to touch project actually look like inside a Fortune 500 company?
The report specifically points to massive undertakings, like mainframe modernization.
Oh, the ancient servers.
Right. For decades, massive corporations, especially in finance and insurance, have been absolutely terrified to touch their legacy mainframes. We are talking about 40-year-old code written by programmers who have long since retired.
Like old COBOL code.
Yes. Nobody wants to risk migrating it because if it breaks, the entire bank stops functioning.
Yeah, that's a huge risk.
Or consider something like know your customer compliance processes in global banking. Highly complex, heavily regulated, bespoke problems.
Okay.
Now that AI can read, translate, and test that ancient mainframe code in weeks instead of years, it de-risks the entire project. Accenture doesn't lose the revenue. They just get hired to solve the massive, enterprise-wide strategic puzzles that unlock entirely new, much larger budgets.
Okay, that makes perfect sense. The faster the AI clears the dense brush, the faster the consultants get hired to build the actual city. And clearly, the financial math is working out heavily in their favor here. Their wallet backs up the strategic confidence completely. You do not return $2.7 billion to your shareholders in a single quarter if you are secretly worried about your core business model collapsing.
You hoard cash if you're worried.
Right. But they actively accelerated their share buybacks, purchasing 6.8 million shares for $1.7 billion. That is the behavior of a company betting very heavily on its own positioning within the new ecosystem.
It is a massive statement of financial confidence. They are signaling to the market that decoupling from the billable hour and accelerating client timelines with AI is expanding their total addressable market, not shrinking it.
So let's take a breath and recap the journey we've just been on. Because this was supposed to be a standard, dry earnings report, and it essentially turned into an architectural blueprint for the next decade of the economy.
It really did.
We started with an $18 billion revenue print and uncovered the messy reality that 1 in 2 AI projects requires fixing broken data plumbing before the engine can ever be turned on.
The engine needs a car.
Exactly. We explored how the shift from generative thinkers to agentic AI doers is no longer theoretical. It is actively tripling direct hotel bookings for Radisson. We broke down how the world's biggest consulting firm is spending $5 billion on M&A, buying network data hoses like Ookla to decouple its own profits from the human billable hour.
Right.
And we solved the cannibalization paradox, proving that faster AI just unlocks bigger, harder enterprise problems. So what does this all mean?
The big question.
Well, I'll tell you. Whether you are prepping for a boardroom meeting tomorrow morning or you are just intensely curious about the actual state of the global economy, this document is proof. The artificial intelligence transition is no longer a theoretical future happening in some Silicon Valley laboratory.
Oh, it's here.
It is a fully budgeted, multi-billion-dollar present. It is happening right now, actively rewiring the ground underneath our feet.
The infrastructure is being poured as we speak.
Yeah.
And this raises an important question, something I want to leave you, the listener, to mull over long after this deep dive ends.
Oh.
Buried in the details of this report, Accenture mentions that they are forcing their own 786,000 employees to actively use these AI tools. But they aren't just suggesting it. They have made the use of AI a formal, tracked part of their employee performance evaluations.
That is incredible. So if you don't effectively use the AI to do your job faster, you actually get a bad performance review.
Yes. It is a fundamental shift in how human value is measured.
Yeah.
So think back to that crystal ball we mentioned at the very beginning of the show.
Right.
If the company that is literally building the AI future for the Fortune 500 is already judging its own massive workforce on how well they let algorithms execute their daily tasks,
Right.
how long until your performance review includes a strict metric on how effectively you've managed to automate yourself?
That is a deeply provocative, slightly terrifying, but absolutely essential thought to end on. If the plumbers of the AI revolution are automating themselves, the rest of us need to figure out our own transmission systems quickly. And that is all for this deep dive. We'll see you next time.